welcome to the Short Vol Show, your spot for everything about the VIX and VIX term structure that you just can't get anywhere else. There is no other daily show on YouTube dedicated solely to the VIX term structure. And here we are. And, you know, not everybody's into the VIX term structure, but that's okay. You can watch some other show if you're not. Welcome to the show. We have a really exciting day in the markets. Let's take a quick peek at things. And what is the news? Well, the news is UVXY bursting through the all-time low here. And, you know, it's been months and months and months. I have to calculate the exact number of days. It's somewhere around like 210, 215. I'm going to actually go through and make that calculation. But really long time since the all-time low. I mean, it's taken, since the Volmageddon, it's taken months and months and months to get there. And a lot of that is due to the fact that this was deleveraged. It went from, you know, when it hit that last low, it was a 2 times leveraged fund. And then after the Volmageddon, it was nerfed, as they say. They turned this rocket ship into a Nerf rocket in February. And that's unfortunate, because if it wasn't deleveraged, it would have hit the all-time low much sooner, like TVIX did like a month ago, or if not more. So, but here we are, finally, all-time low, 844 bid at 845 right now, and Contango to the moon. Contango, I just checked it. I'm getting a reading of 10.42% Contango. So that is per month, folks. So that's a big number. On top of that, the spread between the spot and M1 future, almost $2 right now, and we're like halfway through the expiration cycle. So that is a big number. So, and the VIX down 26 cents right now, trading 11.0, or not trading, but indicated 11.01, because the VIX doesn't trade. It's just a number based on a strip of puts in the SPX. So that VIX indicated right now 11.01. Now my bet on the Options Insider Radio was that VIX 12.05 by the end of the week. So I've got 4 more days for a little pop here, because I need to win this contest to show the Mark Longo and Mark Sebastian what's up. So I'm looking for a little pop in the VIX just to win that contest. But in the meantime, we can go lower here today and tomorrow. Facebook on an incredible rip lately. Let's take a look at Facebook here. Just ripping back up. Yesterday was up, I don't know, $6, $7. Looks like looking to gap open up again today. Just a big recovery. Also in the news, Twilio earnings, another rip yesterday. Now I had mentioned maybe you would want to do sell a strangle for something in Twilio. Well, that actually wouldn't have even work because of this big rip that Twilio did yesterday. Pretty impressive rip to the upside. Etsy, also a rip. Etsy yesterday, rip to the upside. Give it back a little bit in the after hours yesterday in Etsy. But pretty big rip there. Actually, what am I saying? It looks like it's hard to tell. Okay, so no, we're still up from after hours in Etsy because earnings came out after the close. So this is all after hours. The rip up, indicating to open a lot higher today. Etsy. Okay. I was looking at a couple earnings plays. I found this one, CACI. I was on earningswhispers.com. I don't know if you've ever checked out that one. It's a pretty good one for earnings information. Earnings Whispers. It gives you, what people are talking about as far as earnings per share. Now, I am one of the belief that even if you knew what the earnings were, you can't tell if the stock is going to go up or down. So just because they're whispering higher or lower, that doesn't really give you an indication of which way these are going to go. Nevertheless, people still like to do this, and so check out earnings whispers. I basically just use it to tell me when earnings are coming out for different stocks. But there you have it, earnings whispers. .com. So I was checking out the CACI, and everything. I looked on Glassdoor, which is a website that tells you how employees feel about a company. And I was looking at the CACI, which is it looks like they do like maybe they're a headhunter for defense contractors, something like that, which as you would imagine would be a winning idea in the Trump era to be a defense contractor headhunter firm. So when I say headhunter, of course, I mean you find staff for defense contractors. And I think that's what they do, but don't quote me on that. CACI, but really positive looking stock. The earnings for this one come out in, let's see what we've got for this. I think that comes out next week, but I don't know why it's not popping up when here we go. 8:15 after the market. And so this could be a good one to I was thinking this could be a good one to maybe buy some calls ahead of earnings and kind of ride it right until earnings and then make that decision if you're going to get out right on earnings or not. If we look at the charts, these vol levels are pretty low, and you could buy a stock's 81.55, so you could buy the 80.85 call spread for in SEP maybe for $3 and look to almost double your money if that comes through. The August one, same thing. I would go for SEP because you got way more days and it's only a few more cents to buy the SEP one. So I would definitely go for the SEP one on that if you're gonna put a play on. So I'm talking about the SEP 180, 185 call vertical on this one. Might be an interesting play. The other one I was looking at was DAR, Darling Ingredients. And that one has earnings coming out, I believe. I don't know why I'm not able to do this I believe it's tomorrow or the next day. I don't know why it's not letting me look up the news on these things. Okay, here, yeah, 8 after the market, DAR. This one, once again, vol's relatively cheap. It's in the 20s here, so you could actually if I was going to do a play, I'd probably buy SEP 20 calls outright for $1.15, or even SEP 19s, or even SEP 21s for 65 cents, something like that. Really inexpensive shot. 65 cents. You're paying $65 to control 100 shares of this issue. That seems like a decent play. And if it doesn't work, you lose your $65. But if it does, you have control of 100 shares for let's see, for 45 days. So that seems cool. So maybe check out that in DAR. Another thing you could do is you could buy the SEP 21.22 call spread, 65 minus 20, so for 50 cents. And if it gets to 22 in 45 days, you double your money. Seems like a reasonable possibility there. Now, this is a low volatility stock. Let's take a look here. So it could conceivably just, it's hung out. This thing has hung out. Over the last year, it's only gone from 16 to 20. So it could conceivably do nothing. It could just hang out for 45 days. Because, look, it's taken since May, it's bounced around since the beginning of the year between 19 and 16 just bouncing around. So this could hang out and do nothing. But, you know, if you want to take a chance and buy those calls for 65 cents, you'll find out on these ones that are lower volatility. The reason they're lower volatility is because they move around less. I mean, it's just, you know, kind of makes sense. So there you have it on DAR. In the meantime, I'm still watching Facebook. Facebook seems to still be continuing on a rip, so we'll see what happens with that. Tesla, I just have my Tesla spread on here, centered around the 345 strike. It was offered a little lower after the close yesterday, and it was offered a few minutes ago, even down to offered at 340, but now coming back a little bit, 343 bid at 344. And you know, I'm centered around the 345 strike, so it's working out perfectly right now, but it seems strong, and I wouldn't be surprised if this thing gets back up to 350, 360 at some point soon. But in the meantime, I'm hanging out. I like my little calendar spread. I have this calendar spread on, which is the 24 August 21 SEP calendar spread. It's the I bought the SEP, the 21 SEP 345 call, and I sold the 24 August 345 call, and I just have that spread on a little bit, and right now it's showing me it's showing me, this is not correct what it's showing here, but it's showing me long, like, I think 20 it was showing me long 20 deltas versus 340, so it'll be a little bit less here. Okay, so it shows me long 12 deltas here. So, you know, below the 345 strike, I'm long a couple deltas. Above it, I'm short a couple deltas. And so on the down move yesterday, I made a little bit till the 345 strike, and then lost a little bit. And now on the up move, again, I make a little bit. So hanging out here in Tesla. Somebody was asking about this spread yesterday. Now, you can tweak which one you're long and which one you're short. The closer you are to expiration, the more sort of risk you have gamma-wise as far as like it moving away from the strike or towards the strike. If you want a position that you don't have to monitor as often, you can buy a farther out month, and you can sell a farther out month, and that way the gamma risk is a little bit less. You'll collect a couple less dollars per day, but you won't have to sort of monitor it as closely. So if you, for example, if you were to pick the option I sold is 17 days out right now, which is pretty far, but you could pick maybe something that's 30 days out. You could do the 19 OC August 31 spread, or the 19 OC SEP 7 spread, and you know your short gamma won't be as much. Your delta won't swing around as much, but you won't collect as much. So maybe instead of collecting 100 a day, you'll collect 50 a day, but it's a little bit more manageable position if this thing rips around. It just depends on kind of what your tolerance for risk is, really, I would say. No, this has a couple. I knew this had a couple extra things. I was modeling some other stuff, so that's why it's a little bit off. Had a couple extra things, and I could tell because it showed the P&L down 25% at over the amount that was allocated in my account, which doesn't make sense, because if you have a spread on 1-to-1 calendar spread, you can't lose more than your account value is at the moment in the sample account. So there must have been another modeled position on. So there we go. So showing 12 deltas here. Now if you move the day up a little bit, your deltas are going to get bigger unless you're right at the strike. If I was above the strike, the short deltas would get bigger. If I'm below the strike, the long deltas get bigger. And that's just kind of the way that works. So there you have it. Have an interview later today, which is very exciting, and I'll put that up as soon as possible. So please check back for that interview with somebody who you've seen many times before on the show. So, but he's always very popular, so I think you'll enjoy watching. And to commemorate this momentous rip through the all-time low in UVXY, this is very exciting. I think that the short vol trade I've said this several times, that once we rip through the all-time low in UVXY, the short vol trade will be reinvigorated, and I think we will see more people coming in to put these trades on, and I think our Facebook group will perk up, and everybody's kind of getting excited with Contango. You know, we had Contango over 10% just like right before expiration a couple times already since the Volmageddon, but here we have it more mid-cycle above 10%, so it's very exciting. Look for increased activity, look for the articles to come out in the newspaper about how short vol is crazy and people making money are stupid and all that stuff. Look for all that stuff to come back now, because the short vol trade is back in effect, folks. Anyway, thanks for watching today, and short volers, unite and make your money right now. This is awesome. We'll see you a little later today.